Good morning, good afternoon. Welcome to this week's Qredo Spotlight. I am super pleased this week to be joined by Joe Detommaso from our friends at CMS Holdings. Welcome, Joe. Great to have you here.
Yeah, thanks for having me on.
Yeah. Why don't you tell us a little bit about yourself then, Joe? Just before we kind of kick off, tell the audience a little bit about yourself, what you're up to at CMS.
Sure. Yeah, I'll try to cut it down pretty quick here. So I got into this stuff way back in 2011. I was a senior in high school at the time. I guess the short of it is I was running a lot of independent infrastructure projects. I had something like 200 to 250 GPUs mining script network coins back in the day. Participated a little bit in the ASICS arms race and kind of wrapped things up there and decided to go back to school and lead a little bit of more of a traditional life. After that, I spent a short bout of time in traditional finance. I had been trading international ETFs at a small fund up in Greenwich, Connecticut, before making the leap kind of full-time professionally into the crypto space with a firm called FalconX. FalconX operates as a digital assets brokerage, and over there, I had been working on the US OTC desk. Things really just started heating up with DeFi summer of this past year. And it came to a point where it was a little too much to manage the back and forth of both working a full-time job and kind of managing this stuff on the side as well. So I'd taken some time off to myself and kind of by a bit of luck had linked up with Dan and Bobby here at CMS. And at this point, I helped to lead our investment management on the longer-term VC-style deals, pretty much overseeing the day-to-day research, thumbing through white papers, fielding pitch calls, things like that.
Fantastic. So you've been in the space a long, long time then.
It's funny.
Yeah. So how did your college friends react when you were doing all of this kind of crypto mining and getting involved? They must have been equally bemused and impressed. Were they impressed?
I mean, it was a little bit of living a dual life, right? Because back when the stuff was super early, I mean, it was nuts to people. It was like this crazy hobby on the side, this magic internet money. It's not really a conversation you kind of go out and have with other 19, 20-year-olds at a college party, you know? So it kind of felt like I was living my standard school life as a regular person by day, and any time to myself was really just devoted completely to crypto.
Yeah, yeah. It sucks you in like that, isn't it? It's like a rabbit hole. You jump down it and suddenly you realize, okay, that's a large percentage of my life dedicated now to crypto.
Yeah, I mean, the comparison I always say to people is like, I'm young by age, but I feel like an old man in crypto years. It's
right. I know. I hear that. We hear that one a lot. It's weirdly true, isn't it? Considering how young the crypto space is. So CMS Holdings. So you guys, I think it's fair to say, especially the founders, you guys are like OGs in the space. You are some of the pioneers of kind of getting the professionalism in trading and liquidity providing in the crypto markets. You guys have been doing it, you know, for some of the longest time in the space. But for those of the audience that don't know about CMS, just tell us a little bit about what CMS does.
Sure, yeah. I mean, as most may know, we operate as a cryptocurrency hedge fund. We had been founded back in 2019, 3 partners, Bobby Cho, Dan Medashevsky, and Julian Seguin. Dan had been running Circle's OTC trading desk for a number of years alongside Julian, who ran tech over there. And similarly, Bobby had been running Cumberland's OTC trading desk out of DRW. So kind of relating things back here, a lot of the team in the space is a pretty deep background on the OTC side of things. I think everybody here has worked on an OTC desk in some capacity between Kraken and Circle, Cumberland. So we've kind of seen a lot blossom, both from the institutional side and just the early days of the space in general. The way that our fund is actually structured lives kind of on a hybrid model, split between kind of the actively traded side of things and then venture style longer term investments. I think at this point, we've probably reached an inflection of somewhere around 60-40 split in our capital base between the two respectively. And on the actively traded side, we're kind of out in the market everywhere you could imagine. We play on the centralized exchanges, decentralized exchanges. We're huge fans of decentralized derivatives protocols. And then on the investment side, we kind of look to tie that all together into things that we could see ourselves becoming end users of. So very clearly, most recently, kind of this whole DeFi boom fits the bill perfectly for us. DEXs, lending protocols, money markets, things that we feel we have hands-on experience with in some capacity, either from the traditional world or our past lives in crypto. And we like to get very hands-on as far as users go. I mean, ultimately, we want to become customers of anything that we invest in. So that's kind of how we build our thesis there. And then I suppose more broadly speaking, we try to kind of take a large macro perspective on the space. So from our angle, and I think a lot of others, we see these things developing into more of a multi-chain world where everything coincides and talks to each other. There's more than enough room for more layer ones. And we invest accordingly to that idea.
Brilliant, brilliant. Lots there. So, you know, DeFi being one of the areas you've pivoted into, layer twos, DEXs, you're talking our language here. And so that then brings me really, really nicely into what you might have seen recently, which was our seed funding announcement. We were really pleased to actually pull the wrapper off this and actually be able to talk about this. It's been something that we had been building and working towards for a long, long time. And finally being able to talk about it is such a relief, and we can start telling our story. So we are, you know, super pleased to have CMS on board as investors in Qredo. Tell me a little bit about why Qredo was worth investing in for you guys. What did you see in Qredo that made you have the conviction to go, right, this seed round, I'm going to get involved in it?
Definitely, yeah. So I mean, I think we can kind of relate this back to a lot of the OTC experience the team has had here. I mean, generally speaking, there's a ton of friction in that space still, both between the swap itself and settlement side of things. So looking at platforms that really streamline that process, I think we have a strong understanding of things that kind of make that a little bit easier on the end user. So that's kind of one piece there. I think generally speaking, as I mentioned, the whole DeFi boom and kind of looking at this multi-chain world, Qredo really looks to kind of decentralize the way that we think about custody and over-the-counter swaps today. So that was kind of appealing to us on two fronts there. And then I think finally, you'll hear a lot of people saying this as well, is that they look to really invest in teams and builders. So for Qredo, I mean, they were one of few projects that the first time we saw them, I mean, things were built out. They had a UI. You're not playing around with the command line. And I think we were just very impressed with the team there and the partnerships they had already acquired prior to the conversations we had. So we were pretty confident in kind of taking the plunge there and taking an investment with Qredo in the seed round.
Fantastic. Yeah, I think one of the interesting things that Qredo's done this time is actually build before, you know, going and actually raising a round. So bootstrapped internally, built it, you've got something to be able to show for it, and being able to demonstrate prior to the seed round that you've actually built this decentralized custody solution is quite unique in this space, where usually the ideas come to the fore, you raise on the basis of the idea, and then you go off and build this thing. So I guess it must have been quite interesting to see actually a working product that was decentralized and is also custodial in nature, and what you can build on top of that.
100%. Yeah. I mean, I think we had our first conversation, and then 2 weeks later, we were on call for a demo, kind of just plugging right through. So that's always great to see. You love to see when things are kind of developed that much. It helps to be a little bit more confident when you're throwing money around in this space, I think.
Yeah, absolutely. So then on the custody point then, I imagine custody for your business must be one of the most important things to you from a security and scalability perspective. As the business has evolved from 2019, how have you evolved as the industry has evolved when it comes to custody? What have you seen in the market that is a glaring, should we say, omission that hasn't been fixed yet?
Yeah, definitely. So, I mean, I guess at the core of our business, what we do here is just we manage risk. And I think that kind of piles over to the custody side as well. So we look to take sort of a weighted risk approach on the way that we look at custody and where we're really parking our money. So we're never really in one place or the other. We do kind of sit between a lot of self-custody solutions as well as centralized solutions through third parties. And to us, it's another thing, kind of like the multi-chain idea, the more the merrier, right? I mean, You want to be able to kind of level out your risk, both on the trading side and where you're storing your money.
Definitely. I think, you know, the thing that really struck me when I watched the Qredo team build over the past year or so has been this validation that decentralized custody, not only does it work, actually it brings with it a whole host of benefits. And when you say to someone that is so used to seeing these centralized custodial solutions, that this is a decentralized custodial solution, they go, well, what does that really mean? And if you try and boil that down to its core, benefit, it is the removal of a single point of failure. It is the decentralization of and spreading out of risk across a network, which almost makes it trustless and removes many of those central points of failure, and especially that key private key risk that we're always talking about in the industry. And I think the DeFi space has been plagued with all of these what we call rug pulls. I hate that word, but rug pulls, vulnerabilities that happen where someone steals or compromises the private keys. It's all too common, and it all comes down to central points of failure. So decentralized custody, in our view at Qredo, is going to be the next battleground of kind of custody, because that really brings another layer of institutional grade custody that centralized custodial providers simply can't account for, because they are another single point of failure.
Yeah, absolutely. And I mean, I think generally speaking, the evolution of this space, we see platforms like Qredo coming to the scene now, where they're sort of independent projects introducing this idea. I don't think it would surprise me a lot in the future to see some of these centralized venues sort of dissolve into a similar kind of format there. I think generally that's the way the space is going, and it would be very surprising to me not to see people kind of broaden out into these things a little bit more.
Yeah, absolutely. And I think looking at the feedback we've got, in part a large amount of the feedback we've had is on the decentralized custody, on how unique that architecture is. But also it's the layer 2. So Qredo is a combination of this decentralized custodial solution underpinned by decentralized MPC, multi-party computation. But it's the nexus with a layer 2 solution that allows Qredo to act as an ecosystem in a very interoperable cross-chain manner. So you can go between Bitcoin, Ethereum, Bitcoin, a stable coin, instantaneously. It's an atomic swap, and that is quite unique, we think, in a custodial environment. So a lot of feedback on our side has been around this layer 2 network that we've built. Do you think that layer 2s are increasingly going to play a role in the institutional space and the corporate space, whether they're hedge funds, prop traders, etc.? Because really, we're seeing this year, because of Ethereum gas costs and a lot of the friction happening, Bitcoin blockchain, etc. Even Binance Smart Chain experiences friction sometimes. Do you think layer 2 scaling solutions are going to be an area of interest over the course of this next year?
Yeah, I mean, I think we're kind of seeing it to the forefront, as you mentioned, right now in Ethereum. I mean, you have a whole slew of projects coming out between Optimism, ZK rollups, you have XDAI kind of on the scene already. And it's clearly something that's kind of helped the space move along here. I mean, similarly on Bitcoin, we have things like Lightning Network that are a little less developed at this point. But I think ultimately the benefit of the layer 2 solution through Qredo is the fact that you're able to swap these native assets. I mean, so right now it's great and all that I can wrap Bitcoin and bring it over to Ethereum and trade it there. But at a certain point, you have to ask yourself, how cumbersome does this become at scale for large institutions looking to trade the same thing? I mean, there's risk levers to pull there. You have to think a lot more about what's going on under the hood. And I think just generally the ability to swap native assets is a huge, huge benefit that's being delivered by the Qredo layer 2 system.
Yeah, awesome. And on the point of wrapped assets, it's always been a super interesting concept for me, because the concept of wrapped Bitcoin, and yes, you are using your Bitcoin and you've somehow decoupled it from the Bitcoin blockchain to be able to use it on other chains. But the one thing that keeps me up at night is, well, where is my Bitcoin? How is my Bitcoin that's been wrapped actually being held? Are the security layers on top of that, to a point where I'm happy putting a significant holding of my company or my personal Bitcoin, within that? When you look at wrapped solutions, how do you conceptualize them? Do you see wrapped Bitcoin as a different asset because it's fundamentally an Ethereum-based token, or do you look at them as kind of symbiotic?
I mean, I think a little bit of both, right? You're obviously giving up a little bit of network security when you move something off of the Bitcoin blockchain and then you're dealing with Ethereum. I mean, it's a whole different beast in itself. And I know I'll probably get called out for being maybe a Bitcoin maxi for saying something like this, but me personally, I mean, I would prefer to have my Bitcoins stay on the Bitcoin network as much as possible. And I think we can kind of tie this back just to the general theme of risk management here. You've got all different things going on with these wrap solutions right now. So you have centralized custodialship like wrapped Bitcoin, managed primarily by BitGo, I believe. And then you have a lot of others, node networks like REN, TBTC. You've got synthetics BTC. I mean, there's a whole host of them at this point. And I think they become a little bit cumbersome to kind of sort between and decide, hey, where do I really want to lay my risk out? Right. But I think what we generally sort of try to do here is spread that out in a way that actually makes sense for us.
Yeah. And I think the space is getting so crowded with these wrapped products or these pegged tokens or whatever people like to call them, that there has to be a fundamental point where you step back and go, is this fragmentation good for the ecosystem? Does it make sense? Is it actually to the detriment of the ecosystem? Because one of the things that we've looked at Qredo when we look at the ecosystem is the fragmentation. You've got pools of capital sitting in so many different places, whether it's, you know, if, for example, in your business, you're trading on all the large exchanges, probably. You're also trading on the large derivatives venues. You're also playing in the DeFi sandbox. So you look at your risk management there and you look across all the venues that you're trading on or participating in. And you know, it's a challenge keeping track of where all those assets are at any one time, right? And at some point, something has to change where it brings a synergy of capital efficiency and allows this real cross-chain world to actually happen. Because right now, you've got to put your assets everywhere to be able to play in that arena, whether it's a Binance, whether it's on Uniswap, whether it's Badger DAO, whatever it might be. You've got to send your assets there every single time. So when I step back and I look at the ecosystem, I think something's got to give at some point. We've got to have a moment where people can use their capital in a better way. And I'm really, really thinking that this is the year where, hopefully with Qredo leading the charge, but alongside all these other projects that are coming to the fore, that people will see the value of cross-chain interoperability, of much better breaking down of the silos that we have right now. And, you know, from your perspective, being a trading house, I would imagine keeping track of your assets in all these different venues is really, really challenging.
Yeah, I mean, it's quite a bit of a haul on the tech side here. But I think getting back to your point of just general liquidity fragmentation about the space, it's something I think about quite often. And I think we started to see it a lot with the stable coins. I mean, nowadays it seems like every exchange, every project, they have their own native stable coin to some degree. And you start to ask yourself, okay, I mean, the more the merrier is great to some extent. But you start to have to build other solutions to just be able to move between these things in easy fashion. So right now we have things like Curve in the ecosystem. And that's great and all. I mean, they bring together similar assets under the same pool and allow some flexibility between ease of movement. But at the same time, you're really kind of just layering things on here and it's more pieces to the puzzle. And then you start to ask yourself, well, the whole idea of DeFi, and I think a lot of the idea of crypto in general, is to remove the friction on this movement of money. And it starts to become a point where you're like, wait, maybe we're actually adding more friction into this. So that's kind of how we're thinking about it here.
Yeah, completely. And when we step back and we look at the product that we've got at Qredo and we go, right, well, how can this be used in all these different scenarios? And specifically looking at the DeFi space, we see a massive opportunity there to be able to natively participate in those DeFi pools and DeFi protocols and layer ones, of course, but do it in a way where, you know, you've got a risk managed entry point and exit into those ecosystems that is overlaid with this security that only comes with, you know, using, for example, an MPC secured custodial solution. So for us, all of this, should we say, hot air that we've seen over the last maybe 9 to 12 months around DeFi is now moving into the maturity stage. People are now going, okay, right, cool. We get DeFi. We get what we can do there. Yeah, returns are fantastic. But where's the infrastructure for DeFi? Where am I going to be able to scale my position or my exposure in DeFi? And that's one of the challenges that we've taken head on. We want to build a product that is compatible with DeFi from day one, but has all the benefits of that institutional grade security and multi-party computation, keeping everyone's assets safe. So that is something that we'll talk a little bit about more in the coming weeks as we kind of get our story out there. But do you see an increasing concern in the trading space around the amount of capital going in, but the limited, should we say, safeguards and knowledge there is actually about where that capital is going, who's managing the private keys for example, the vaults in DeFi protocols? Do you see that kind of building up?
I mean, it's definitely something you have to consider, right? And I think it kind of breaks down a little bit differently, kind of just depending what you're talking about and which project you're actually looking at. But I don't know. I mean, again, like I think, and not to kind of harp on the same point here, but it really just boils back to risk management and really understanding what the possibilities are there. I mean, maybe you might you may not know who's controlling the private keys, but at least you have a sense that there is somebody behind the scenes that has some type of trigger to pull on things actually moving around. So, I mean, for us, it's a consideration we take. We obviously play quite a bit in the smart contract world, so it's a risk that we do bring on. But at the same time, we try to limit that to some degree as much as we can, kind of holding in more trusted third-party venues or self-custodying as much as we can, at least right now.
Yeah, I mean, that makes a lot of sense. And so for your business then, looking forward a little bit, do you see an increasing appetite on your end to get involved in more DeFi projects, bearing in mind there are already a hell of a lot out there? How do you kind of manage what comes out in the DeFi ecosystem and what you get involved in? Because I imagine for some of these, you've got to move quickly. You've got to be able to scrutinize the benefit of getting involved in these DeFi protocols and projects. How's your thought process around getting up and running and either investing in or participating in something?
Yeah, definitely. So, I mean, I think generally for us, we look for projects that we can be most involved in as possible, or I should say as the team allows. So we'd love to be hands-on. We don't want to be overbearing in a project. But a lot of what we like to do is get hands-on with the code to some degree, familiarize ourselves that way, be able to provide feedback to both the teams and the communities on that front. And then kind of past the investment point, we really look to be involved as far as bootstrapping goes. So I guess the easiest example is liquidity provision. I mean, any investments we make, we really try to adhere to a promise that we'll be there day one, liquidity providing in the pool, bootstrapping what you need, and we're happy to do that. I mean, I think it's something that we just generally digest as an investment risk in this space. But I think given kind of our crypto native background, how long we've kind of been here, we're able to quickly reach a conclusion that the risk return on a lot of these things makes a lot of sense for us to participate as much as we can, no matter like where it really is going.
And you mentioned earlier that you are, trying to move quite quickly. You like to move fast when you're making these decisions. And one of the things that you always check is, or you try and check, is diving into the code. So being crypto native, being of a team of a caliber that can do that is quite unique. But I think on that, what really has struck me in the DeFi space is the lack of transparency in a lot of these projects. There isn't always a window into how this thing has been built. Has the code been audited? Has a verifiable third party come on board and gone, yeah, we've audited it, and on the balance of probabilities, we'd rate it as X, Y, or Z. And that's the reason why we at Qredo have made everything more or less open source. It's publicly available. It can be scrutinized, reviewed. You can also review all of our third party audits at any point, because now that's almost the expectation we feel. People want to be able to see the code. They want to be able to dive into as much detail as they're able to. So in a way, it's quite unique to the crypto space that not only do you due diligence the project, but you due diligence the code. So I guess that takes up a hell of a lot of your bandwidth.
Yeah, to some extent. I mean, like, I think as a primary hurdle, we really look to just get the security audits under wraps. It's a little bit off-putting to us when things aren't audited, at least by someone. And
Mm-hmm.
obviously, you have different degrees of reliability amongst firms in the space there. But we do like to see an audit to some extent before we participate in most things. I guess kind of on top of that, on the smart contract front, especially in like the EVM Ethereum world, we have our kind of set of functions that we like to check out within the code. I mean, a big one for a lot of people is minting functions, who's the actual owner address in the code, kind of simple checks that you can get through quickly without too much of a loss of time there. Right. And there obviously is always all kinds of funky stuff that can go on in these things when they start to interact with each other as this contract is actually out in the open. But we feel that kind of an audit plus a general overview of what we're familiar with, at least in the code, gives us a strong sense of kind of the safety and security that we're going to experience there.
Yeah, yeah, makes a lot of sense. So let's change gears a little bit and talk about your business. Where are we now in your kind of thought process around DeFi? What do you have planned over the next couple of months? Where are your kind of business priorities at the moment?
Yeah, so I would say kind of to date, we've leaned pretty heavily on the application layer of things, kind of tying this back to the introduction. Things that we're most familiar with and things that we feel we can use is where we're really most valuable in this market, at least right now. Mm-hmm. I think it's become glaringly obvious probably over the last year or so how much infrastructure is really needed to really get things going in this place. So we're taking a lot heavier look at data and infrastructure projects nowadays, mm-hmm. and things that really underpin these projects as opposed to the applications themselves. And I think more broadly speaking, we're kind of looking to decentralize what we do a little more. So probably over the last 6 months, we've started participating a lot heavier on the DEX trading side. I mean, we're out there probably across every derivatives platform that's usable right now in the DeFi space. Mm-hmm. So we do a ton of trading with things like PERP protocol. We're starting to get very active with DYDX. We've helped to bootstrap the liquidity fund on DerivadeX, a lot of things like that. And I think kind of as we grow here, we just want to look for more avenues where we can really help as far as bootstrapping and liquidity provision goes after the check comes, right? I mean, because that's really mm-hmm. only one piece of the investment process for us. And what we want to rely a lot heavily on here is, hey, we're not just giving you guys a check. We want to play with this thing. We want to bootstrap this thing, and we want to participate in this thing. And I think kind of as we move forward here, we're just looking to do more and more of that as much as we can.
Awesome. And so you guys play a lot in the CeFi space. I imagine you trade actively on the big exchanges of the space, the Huobi's, the Binance's, etc. Have you seen those CeFi venues evolve over the past couple of years? If we talk about DeFi venues, DEXs, every week there is an evolution or some kind of advance in what they're doing. On the CeFi space, I imagine the change is a little bit more gradual, a little bit slower. Have you seen a positive movement in the way those firms have developed?
Yeah, I think so. I mean, I think a little bit more visibility into what these firms are actually doing on the other side of things has kind of come to the forefront. I mean, we've obviously had a lot of episodes in the past, kind of 2016 and prior, of larger exchange hacks and things of that nature. And that's kind of eroded from the ecosystem to some extent. I mean, mm-hmm. I wouldn't say we can't see it again, but I think there's definitely been more of a general sense of safety in using a lot of these venues, regardless of where they're actually based. Mm-hmm. Kind of building on that point, I think just derivatives in general have become a lot stronger in the space over the last few years. It used to really only be OKCoin. You could trade Litecoin, Bitcoin, their coin margin futures. But now we have a whole slew of platforms that offer similar products, different types of margining, different types of cross margining. And I think we've been really happy about the development that we've just seen generally on the derivatives front. That's kind of what's most exciting for us.
Yeah, definitely. I think we've got really familiar as a company with the derivatives space because obviously one of our investors in this round was also derivatives. So looking at the growth in volume on that venue has been pretty staggering. And one of the challenges they have is helping their users move their capital around quicker. So the synergy between Qredo and Deribit is pretty clear and present there. So we're going to be helping them fix some of those problems in the near future. Do you see that as being I guess, something slowing down your growth? The fact that every time that you have to trade and open a position, whether it's a perpetual, a contracted future, a options contract, do you see the capital movement as one of your pieces holding you back all the time?
I don't know if I would say that it holds us back, but it's definitely one of the concerns on the forefront, especially when the market's moving, right?
Yeah.
I mean, you've got capital deployed and positions open across a whole slew of different venues. And when things start to get volatile, I mean, the first check goes to, okay, where's our collateral and where do we need more collateral? So right now, moving between venues, there's friction there. I mean, it takes time. You're waiting on a BTC confirmation. I mean, ETH is pretty quick nowadays, depending on where the gas fees are at. But at the same time, there's a concern, kind of how quickly can we move capital to the places that we need it when we do need it.
Yeah, definitely keeps everyone up at night. Brilliant. Well, Joe, we're slowly running out of time. It's been a real pleasure having you on today. Thank you for joining us. We're definitely going to call on you again, and maybe some of the other CMS folks to get on and join us again on Spotlight in the next couple of weeks as we build some stuff out. But for now, thank you so much, and we hope to see you very soon.
Yeah, thank you as well. It's been a great time, and we're really looking forward to seeing things build out.